There's a lot of echo in this room, so I'm going to make this intro really quick. A lot of updates in this video. First, this project, moving right along, just finished painting. 2, dividend update. 3, portfolio update. And 4, stick around to the end. I want to talk to you about what we're doing with our mortgage. Hello, YouTube friends. Welcome to the channel. I hope you and your investments are doing well. So first update's over. Renovation project, as you just saw, is coming along. Need to get the furniture into that room because we're tired of sleeping in the living room. It's kind of getting to wear on us. So need to move those projects along. Update number 2 is the portfolio update. You know, how am I doing overall? Am I close to achieving my goal? You'll see. Number 2 is a dividend update. I want to show you kind of how I did in the month of October. And then finally, stick around to the end because I just want to give you guys an update because we are renegotiating our mortgage. And I want to tell you what my plan is going into that, what I hope to get out. So stay tuned for that information. So let's go into looking at the portfolio overall of my Wealthsimple trade. So for those who are new to the channel, I am a dividend stock investor. I put $150 every week into my Wealthsimple trade account where I am, and it's a tax-free savings account, where I am hoping to earn up to I wish, $10,000 by the end of this year. I've been putting $150 every week into it, buying dividend paying stocks so that way I can get that passive income quarterly and sometimes on a monthly basis and reinvest that money right away just to see that money compounding and it just grows. So let's take a look at how that plan is so far playing out. Okay, let's get into these updates. For the day, I am down 1.67%, so down $151. For the week, though, you know, it's looking a little bit better, 0.3% high. The month, I'm up 1.99%, almost 2%, $174. 3 months, 1.22. So in that 3-month period, that's where we had the S&P 500. A lot of those stocks, a lot of technology stocks, a lot of things went down at that point. The TSX had, I think, 2 or 3 days where it was really down. So they're kind of in that 3-month period where there was a lot of slowdown happening. Because like you see the 3 months 1.22%, but when I go to 1 year, boom, 6%. I'm up 6%, $506 overall, which that is just awesome. Number one reason why I want to create a tax-free savings account and grow my money this way was just really seeing the power of compounding interest. Typically before, we used to put our money into a high interest savings account and we would never see a $500 increase at all. So this is absolutely amazing. And the other beautiful part is that it's all commission free, $0 with on the Wealthsimple Trade platform. So yeah, I'll click all. I've been investing less than a year, just started in February 2021. So again, up 6%. I'm hoping by the end of the year, maybe that might get inch closer to 7%, which I don't know why. That's just kind of a goal I have, you know, to grow every year by 7%. Some years will be up higher, some will be lower, but just really averaging out, say, over 5-10 years, if it's at least a 7% growth every year, I'll be happy. So that is great. So now I want to tell you about the dividends that I earned in the month of October. The month of October was absolutely amazing. I got paid a total of 8 times. It fills the screen here. This is the first time this has happened. So, and I probably won't see this again until January. So, starting at the bottom, the first stock is Acon, $2.08 from Acon at the beginning of the month. RioCan, it is a monthly real estate investment fund. They pay out a distribution. I'm only getting $2 from them, but hey, $2, bring it on, bring it on. That was again at the beginning of the month. Then we have my ETF, the Vanguard S&P 500, the ticker symbol VFV. So that is just $1.33. It is the lowest dividend yield of all my stocks, but I bought some of that because I want to get exposure to the US market in my tax-free savings account. Then following up that is Interject Renewables. So on October 15th, they paid $4.68. BCE, they have a nice dividend yield. Highly recommend checking out, let's say all the telecoms, but Bell Canada, I think it's like 5.5% dividend yield. So this is a great dividend player, worth looking into. On October 15th, they paid me $7. So again, this is an awesome stock to invest in. On October 15th as well, Pizza Pizza. It is another monthly dividend paying stock, and I'm up to $3. So I'm really starting to see the Pizza stock kind of growing, just kind of always trying to put some money into Pizza. Maybe usually once every 2 months or so, putting money in there. Can't yet afford a slice of pizza, but we're getting there. We're getting there. And BNS, that is the Bank of Nova Scotia. So $7.20 from the Bank of Nova Scotia on the tail end of the month. So that one just kind of boom, really put me up there. So again, the financial institutions are another great dividend vehicle that you want to take a look into. It pretty much is the financials, the telecoms, and then the industrials, so like your energy companies. So, and then to round it all up is Diversified Royalty Corp, ticker symbol DIV. This is again a monthly dividend paying stock, and I am almost up to $3 there, $2.98 to kind of round out the month, which then brought me up to, I think it was like $30. It was over $30, which is higher than my average, what I've calculated to be my average. Basically, I've done a calculation how many dividends I would receive for the year and divide that by 12. And so far, like the month of October was way above that average. So awesome. I expect November is not going to look like this at all. So again, I probably won't see an amazing growth month like this until January. But this was so rewarding to see the numbers, the amount of dividends received in October. So awesome. This is why dividend stocks is so amazing to do. Highly recommend it. If you're just getting started, there's a referral link down in the bottom. Check out Wealthsimple Trade. So simple to start, and you get a free stock. And basically, just it's a great way to get started. Anyways, carrying on. That really does kind of round out the dividend update. The final update I want to give you guys is on what I'm doing with my mortgage. We currently owe just shy of $82,000. It's currently made up into two parts. One of those parts is just roughly $4,000, and that is going to be gone come March 2022. And the other portion, that is the part we're going to really renegotiate and come up with a better deal. Right now, that part, the amortization is 25 years. And I think the interest rate was 2.69%. We are going to renegotiate, and that was and a 5-year term. So those are the three kind of factors that go into a mortgage, So your amortization, your term, and then obviously the interest rate. Now, knowing that the one is going to be completely gone come the new year, it's time to figure out, okay, how do we make this other big chunk a little bit more comfortable? So what we plan on doing is lowering that amortization period to 10 years. So we're going from 25 to 10 years, because obviously we want to shrink the amount of time that we're going to be kind of holding this mortgage. But the main thing what we're doing is changing the term. But what I've learned from reading a bunch of great books, Wealthing for Rabbits, The Wealthy Barber Returns, even The Simple Path to Wealth, they all talk about different aspects of like your mortgage and your house and everything like that. And one of the great tips I learned from that was actually looking at a shorter term period. So just by potentially going to a 3-year term, we could shave sometimes like 0.5 to like 0.8% off of your interest rate, which it seems low, but you add that up over, like, again, if I'm doing it over a 10-year period, that can significantly reduce the amount of interest that you're actually paying to the bank. What it does mean is that you're going to renegotiate your mortgage after 3 years versus 5 years, but that's okay. That's okay, because in the short term, we're going to be basically saving a whole lot of extra money, which then some of that extra money is actually going to go towards paying for some of those renovations that you saw. But then more importantly, and which more related to this channel, is that we could actually take some of that extra money that we are saving from not paying the bank and actually purchase more stocks in our tax-free savings account, or put more money towards our registered retirement savings plan. I actually did a video, which you can check out here, which talks about my plan to not so much double up my payments anymore, but to put that money towards stocks, which then pay out a higher interest rate. I will give a quick update after our bank appointment is done, and just let you know kind of what how that has worked out. If you have any comments about what I could be doing differently when it comes to my mortgage, I would love to hear it. I've not been very adventurous of looking at different banks to see where I could actually negotiate a better interest rate that way. So if you have some experience doing something different, I would love to hear it in the comments. And as always, if you guys are enjoying this video, please give it a like and a thumbs up. I really love to grow this channel a lot more. And hey, I'm like kind of like stuck at this like 300 subscriber mark, Please subscribe. Help me get to at least 400 by the end of this year. I would really, really appreciate that. So hit subscribe, and we'll see you in the next video.